With the recent rise in the risk-off trade, gold has come back into fashion. But what about the longer-term investment opportunity? Is gold a real proposition? If so, why? There's no intrinsic value, it pays no dividend, and has considerable downside risk if, as an asset class, it falls out of favour. Well, joining us now is Jatin Patel from the Royal Mint. And thanks indeed for joining us. You come to us at an interesting point, and I know that through the Royal Mint that you partnered Han ETF in bringing an exchange-traded fund to the IG platform centred around gold. What's the proposition?
I suppose there are three elements to the proposition. One is that every single ETC is backed by gold held at the Royal Mint. In Wales. Most ETCs have their gold held in London. With the Royal Mint's ETC, the gold is actually held by the Royal Mint in Wales. We're a government-owned entity, a non-financial services firm. Hence, customers can rely on us having non-financial systemic risk. Secondly, it's authentically backed by physical gold. Every single share has 1/100th of an ounce of gold attached to it. And thirdly, I suppose the provenance of the gold. We comply with the LBMA's responsible sourcing program, and hence you could almost say that this is green gold.
And I believe there's a dollar-denominated one.
There's
and a sterling one.
Yes, we have two products out there. One is called RMAU, which is a dollar-based. It's around $17, I think, at today's prices. The second one is called RMAP, which is essentially a pound version, which is about £13. We launched it last week. And we've had I suppose just under a week of trading.
Yeah. Okay. Yeah. But let's talk about the underlying fundamentals about what's going on at the moment with, as I said, this risk-off trade promoting gold. And you said in your opening statement there, in the current environment.
Yeah.
What is it about what's happening at the moment that drives us towards gold in the context of what I said about the fact that it has no real
I think two things. If we had we can take some regions, let's say North America, Europe, and Asia. Okay, but let's take a step above that. And I say if we take a step above that, what you have is that in a growing economy, inflation increases. When inflation increases, historically, gold prices have increased. Okay, clearly the markets will perform better than the price of gold, but gold prices keeps up with inflation. However, when the market turns and the markets turn downwards, okay, gold actually provides a safe haven. So you get the benefits of both. Clearly, it doesn't necessarily outperform the market when there is growth in the economies of the world, but it does outperform when the markets turn the opposite way. And if we take, for example, North America, the markets look fairly stable, for now. We don't know what other shocks could come in. We know that in the near future you have the elections coming up. We don't know how this coronavirus may or may not impact the US economy. You look at Asia, we know that's been impacted today. Hence you've seen since January, the price of gold I think has gone up by what, 14 or 24%. Yeah. So, and then, you look at Europe, which is kind of benign, and it's kind of sitting on the fence. It kind of it looks very soft. So I think it's created an environment where people are looking for alternative ways to hedge their portfolio. And I think gold being the classic hedge has led to the rise of gold. And it hasn't necessarily started at the start of this year. It kind of the whole of 18, 19, and this year as well.
2020, yeah. I know that you're not into giving financial advice. You can't give a projection as to where gold is going. But what I do want to get from you is a sense of opportunity here, because you mentioned the three regions: North America, Europe, and Asia. And now Asia, I know particularly, is interesting because of the demand that's coming through, especially central bank buying. The evidence there suggests that there's a lot of demand. To that point, I'm surprised that gold isn't higher.
I think central banks. If you look at 7 years ago, there was a change. Prior to that 7 years, there was 10 years of selling. Okay, central bank buying doesn't switch year to year. It tends to go long term. So we're, I think, in the 7th year of central bank buying. And it's not just the Asian economies. It's Russia, it's Kazakhstan, it's Poland, it's Germany, you know. So a lot of central banks have started buying, but they started buying about 7 years ago. And we see that potentially this could continue. So in effect, what this does, it provides a floor. You know, and then in the middle of all this floor, you have these shocks. You know, whether it's economic shocks, you know, coronavirus, political shocks, relationships with Iran, relationships with you know, North Korea, etc., etc. So what you've got is kind of you know, quite a nice setup with the central banks buying, so steadily raising the price of gold, and in the middle you've had this, you know, economic, you know, shocks that have come through, and I think that's primarily led to the price of gold going up.
What would you say about the question about why are central banks buying? What was it 7 years ago that triggered that? What was the catalyst that brought?
To be honest, I wouldn't know. I think some of this might be down to realizing the kind of de-dollarization. Some of this might be down to just ensuring there's a nice portfolio mix they have, as opposed to relying too much on, you know, dollar, yen, euro.
So the evidence is there, though, nonetheless, to say that there is confidence in this demand. I'm also interested in taking a look at the different forms of gold. Now, at the Royal Mint, of course, you are specifically involved in an area. We've spoken about the ETFs and the market. You have obviously exposure through that to fund opportunities. What are the options available to those that are looking?
Absolutely. For people who want to buy gold, the Royal Mint provides a suite of products and services. One extreme is collector services, where we have limited edition coins of 20,000 in gold and silver, etc. Then we have bullion coins and bars, which don't have a limited edition, but we change, you know, every year. We produce new versions, etc. And then we also have a thing called signature gold, which is essentially a dematerialized gold. So you can buy by the sliver. Instead of buying a discrete coin or bar, you can buy it by the ounces. So you could buy it up 20 pounds worth. You could buy it, you know, 0.1 ounce worth, etc. So we have a suite of services, and hence it made sense for us to say, well, okay, if we're doing those three already, could we do something for the investor class, the investment segment? And hence we decided, you know, about a year ago to partner with Han ETF and launch an ETC to essentially complete our suite of products for people who buy gold, precious metal products.
Jatin, we'll have to leave it there, but thanks indeed for joining us. That's Jatin Patel, Head of Wealth Management at the Royal Mint.